Well, I was actually in China a couple of weeks ago at the Bao Forum and also in Beijing at an event. And I think the government is trying to convey a message that we're open for business, that we will only become more open to FDI, not less open in the future, to reassure foreign businesses. And we saw some corporate leaders attend the China Development Forum a couple of months ago in China. But unfortunately, we still, I think, sense that there's a lot of caution, a lot of concern about government regulatory policies, uncertainties, also geopolitical uncertainties, especially investors coming from the U.S. or Europe. And so I think people need to see the actions really being implemented, and hopefully we'll see return to kind of normal, more normal patterns of FDI into China going forward.
Talk to me about what's happening in Japan as well. We saw the yen testing 160 this week. It's tracking at a 34-year low. Huge depreciation there. What do you think is driving this? Is it policy diversion based on what we're seeing out of the United States, perhaps a long-term trend there, or is this a problem of Japan's own making?
Well, Japan is still trying to keep a accommodative monetary policy to support growth recovery. We've seen a growth slowdown there as well. So they're balancing interests. But we're seeing depreciations of currencies throughout the Asia region, and it's really related to the strong dollar and the higher interest rates in the U.S. And so I think eventually, whether it's this year or next year, hopefully this year when the U.S. Fed starts to reduce interest rates, then it will normalize some of the currency exchange rate shifts that we've been seeing this year. In a lot of central banks are keeping interest rates high because they want to wait to see what the Fed does. And one consequence of that is that because inflation does continue to moderate, real interest rates in a lot of Asian countries are actually increasing over time. And that, of course, makes it more expensive to make investments and other things. And so it does slow down growth and recovery. But people really are worried about the other issues related to inflation and financial flows. So they don't want to beat the Fed, to the punch.